This is the Demystifying Crypto and Building Wealth podcast.
I knew that would be worth trillions.
That had never existed in human history.
There's been massive opportunities.
The #1 podcast to help you understand and get insights into the crypto world, blockchain technology, wealth building, and financial investing. Now, here's your host, Tico Tawari, the world's #1 most trusted cryptocurrency analyst and Wall Street veteran with decades of experience in the financial space.
Hello and welcome to this week's IG Live. Another interesting day in the crypto markets and in the stock market. So looking forward to talking about this and what I see moving forward here over the next coming days, weeks, and months. Let me tell you something. Markets make you work for it, right? Anybody that thinks that markets just roll over and give you free money, it's just not true. They definitely make you work for it. If I had hair to lose, I'm sure I'd be pulling some out right now. Good afternoon. Hello. Okay, so last week we had Jerome Powell speak. The market loved it. Well, let's talk about the week before. Right? We have the yen carry trade start to unwind. Question here. I sent a question to your contact page and got no response. Okay. Try, I don't know what email that you sent, but go to the site again and just ping them again and say, hey, T said for me to ping again. Sorry about that. Okay, so sorry, where was I? Okay, so we had the markets basically go through an unwind, puke their guts out as the yen carry trade, part of it fell apart. I said, look, this is a buying opportunity. We saw Bitcoin get below 50K, went down to 49K. We then had Powell come out essentially with some very dovish comments at the at that conference, and I'm having trouble getting my thoughts together today, friends. I think the lack of sleep from the baby is having an impact on my brain. And then we saw this big rally in equities, and we saw this big rally in crypto. We saw Bitcoin get to 64K. Now, here's the thing. What happens is these offshore exchanges allow insane levels of leverage when you in Bitcoin and in crypto in general. And when we see these massive bullish runs, what happens is you get this huge increase in leverage longs, people levering up 4-1, 5-1, 20-1. On some platforms, they can even go 100-1. And then the bullishness just gets a little out of control. I was looking at the charts and I saw we ran right up to 65K, right into the teeth of massive resistance. And remember what I've said. With your short-term stack, okay, you buy the dips and you sell the rips. So, 52, 50, 49, you're a buyer. Running up 62, 63, 64, you're a seller with your short-term stack. Now, unfortunately, most folks are wired to do the exact opposite. They sell the dip and then they buy the rip, looking for a bigger breakout. But when you move from 49 to 65 in a week, that's a massive move, right? What is that? 30% in a week. Just by the way that markets move, of course you're going to see a retracement. And that retracement in crypto is always amplified because of the amount of leverage that really uninformed traders, people that call them traders, they're traders in name alone, they use too much leverage at the wrong time. If you're using leverage at the bottom of the move, that first of all, I don't agree with using leverage at all because you always have wipeout risk. And this asset is so amazing that as long as you don't use leverage, you're never going to get wiped out. Even if you have terrible timing and have bought the peak, every year for the last 15 years, it didn't take long for you to be back in the black. But if you were using leverage, well, you could have got wiped out in 2011, 2012, 2014, 2015, 2016, and you've missed out on this whole massive run. So the key is, don't use leverage. And, gosh, if you are going to use leverage, do it at the bottom of the price range, not at the top of the price range into the mouth of massive resistance. But yet people do this again and again and again. And so for us, what is really important is to understand the difference between our core stack that we're holding for the big move and our short-term trading stack that we're using to trade the volatility. You don't want to get those two confused. It makes sense to have them in two separate accounts so you don't do something stupid with your core stack like selling at the low and buying at the high, or over trading with your core stack and then missing the major move. So I know I've talked about this a lot, and I will talk about it repeatedly because there's a saying that time in the market beats timing the market. Timing the market consistently over a year, 2 years, 3 years, 5 years, 10 years, 15 years, 20 years, 30 years, over an investment lifetime, it's so difficult. It's so difficult. There's only a tiny, tiny percentage of people on the planet that are wired the right way to be able to do that. And I'm not. What I am very good at is being able to look at a lot of factors and be able to look at that broad scale trend. And that's something I've been excellent at. And it's something I wanted to talk a little bit about today as it relates to the price action that we're seeing right now in crypto. Right now, Bitcoin's down at 58. It's been as high as 74. Just last week, we were at 64. It's been as low as 49. And you're probably thinking, what is happening here? So there's a few things that I want to share with you. So for the market to break out, for equity price or for a crypto price or for the market to break out, the market has to grind down the hope of the bulls and inflate the hope of the bears. So look at the S&P 500. 2 weeks ago, you saw the VIX go to levels that we had not seen since the COVID crisis and since the '08 financial crisis. So you saw the bulls lose all hope and the bears have inflated hope. And you saw dumb money actually shorting the market with a VIX reading of 66, which is insane, right? You're shorting it at peak fear. And you don't short at peak fear, right? You short at peak complacency. So you had peak complacency in the bears and peak fear in the bulls. It was one of the easiest setups in the world to make money from, which is why I went in and I bought the S&P 500. Those peak readings they're not sustainable. And of course they weren't, and it flipped, and you saw this massive, gigantic rally in the S&P 500, in NASDAQ, and in stocks across the board, because the bulls had gotten ground down, their hope had gotten ground down, and the bears had gotten overinflated. So the same thing has to happen in crypto. If you look back at when Bitcoin has had huge moves, it's happened when the belief behind Bitcoin or behind crypto in general has been at its lowest, when the bulls have been ground down. So this period of time during this year, if you look back at previous halving years, usually Bitcoin just goes sideways with a lot of volatility, and there's just this grinding out. Imagine it's like a meat grinder, and the market is just grinding out the bulls and inflating the hopes of the bears. And then you get to this point where the bears are just convinced that they're going to make a ton of money and they're short like crazy, and the bulls are convinced that it's different this time and they're not going to make any money and they're on the sidelines. And then all of a sudden, Bitcoin explodes. Why does it work that way? I don't know. Does it matter? Do I need to know really the way that a jet engine works in order to fly from New York to LA? Not really. I mean, it might be intellectually interesting, but not really. It doesn't really help me get from A to B. And so it's really important that you have that mental framework, that you understand that meat grinder process is at work. Now, I want to share an experience that I had with this in the past. So back in 2019, I gave a speech to a group of my really premier subscribers that were with me at the most premier level that we had. I don't know, maybe there was 50 or 100 people in the room, maybe more. There could be more. The room was packed. And at the time, I recommended Tesla. This was in 2019. I don't remember the exact price, so I'll use whatever the high was for the year, which I think was like $22. So I said, I pointed to the long-term drivers of Tesla. I said, look, these guys are leading in AI, they're leading in EVs. The world right now doesn't really believe in EVs and doesn't believe in AI, but that perception is going to change. So for me, when I did the analysis on that, I wasn't thinking about, well, what's Tesla going to do in the next day or in the next week? I pulled the camera back and I was like, okay, within the next year to 3 years, these trends are going to play out and the stock's going to go a lot higher. Well, I recommended it. Let's use the high for the year, which was 22. Later that year, the stock is at 11 and change. 11 and change. Then later that year, it's back at 22. Then it goes to 40. Then it goes to a year later, it's trading at about, let's move this over. I've got the chart. So it drops down to 11 and change from a high of 22, goes sideways from May until November of 2019, and then it was back at the high for the year, 22. Then it runs to 43. Then COVID hits, and it goes from 43 to 25. It's what it looks like, 21, 25. So going back all the way down to the original price I had recommended it. And then from the low of 2020, in 2021, it runs to 300. Then gets crushed again, drops down to 182 in 21, and then peaks in November of 21 at 414. So it 20x'd from where I recommended it. But it didn't do it in a straight line. It made you work for it. It was a meat grinder of an experience. And that's been my experience with Bitcoin since recommending it at 400 to where we are now. This year will be a meat grinder year. And you can either get mad at that, get mad at me about that, or get mad at Bitcoin about that, or you can just accept it and say, this is the price of admission that I have to pay in order to make gigantic returns. So think about this. Over the last 52 weeks, Bitcoin from its low to its high has risen 200%. Now, if something rises 200% over a 52-week period, don't you think it has to consolidate a little bit in order for it to have the next move? Of course it does. That is the nature of price appreciation on assets. You don't want assets to just go straight up, because assets that go straight up come straight down. You want them to go up, consolidate, shake out the weak hands, and then go up again, consolidate, shake out the weak hands, and keep doing that. And that is what Bitcoin does year after year after year. So this year, my friends, is about getting exposure to not only Bitcoin, but other projects that are just getting ignored right now. And that's the opportunity in the market. That's always the opportunity in the year of the halving, because the altcoins, they always look like death during this particular year. But when we go into next year and the fireworks start popping off, that's when you see those massive moves. But unfortunately, most of the people in the greater investing or trading world won't participate anywhere near the level of gains that people who buy into now are going to see. The more uncertainty there is in a market or in an idea, the more money there is to be made from that idea or from that market. People, we crave certainty in our everyday lives, which makes sense, but it is a mistake to crave certainty in your investing life. Yes, there are certainly aspects where you need certainty, which is why you buy bonds, because you need a certain level of certainty, or why you buy the S&P 500, which gives you a level of certainty over a 10-year time period. But if you want to make really big gains, you have to move against the market and against commonly held beliefs. It's the only way that you can get to own something that is that is fundamentally mispriced by the market. And in my opinion, Bitcoin is fundamentally mispriced by the market. The market has not priced in, fully priced in the impact of ETFs. The market has not fully priced in the fact that pension funds are now using Bitcoin. The market has not priced in that at some point we will have an options market on Bitcoin and in the crypto space. The market has not priced in that we will have other ETFs that will target different strategies within the crypto sphere. The market has not priced in that wealth managers are going to start recommending Bitcoin to their wealth management clients. None of that is priced in. None of it is priced in. Now, what's the exact date it will be priced in? Well, I didn't know that when I recommended Tesla and I talked about their EV exposure and their AI exposure and the moats that they had created with their data. I didn't know, but I just knew that it was mispriced and that at some point, and not like some point 20 years, some point within the next year to 3 years, that would get priced in. It was the same deal when I recommended NVIDIA. I literally said NVIDIA is going to become, this is back in 2015, NVIDIA is going to become one of the most valuable companies in the world, and it's because of AI. And that's all you needed to know to make a fortune from NVIDIA. So you just buy it and you leave it alone. You know, this idea of being so married to the exact date when something is going to go higher, I abandoned that. I used to spend hours of my life, years of my life, trying to figure out exact timing rather than just figuring out, okay, how is a certain set of circumstances going to play out and who's going to benefit from it? Then just buy those assets, leave them alone, and carry on with the rest of my life. But nobody wants to do that because we crave certainty. And I want you to be aware of that bias that you have of craving certainty. It will kill you. It will kill your returns if you crave certainty. We live in an uncertain world. That's just the reality. And especially with investments, the way that you mitigate against that uncertainty with your investments is you just use position sizing. That's how you mitigate your uncertainty. All right, friends. So volatility is just the nature of things. I want you to focus on the core drivers of price, which in crypto is adoption and liquidity. And if you focus on those core things, that's all you need to know that the asset is going to go higher. It's the same thing with Microsoft. Back in the 80s, when Microsoft went public, even up to the early to mid 90s, all you needed to know was that we were going to go from a world where hardly anybody had a desktop computer to where everybody would have a desktop computer. And so Microsoft software was going to be in every computer. That was it. That was all the analysis you needed to do. All the volatility that Microsoft experienced over the last 40 years didn't matter. That was the only analysis that you needed to do. Look, Wall Street, newsletter gurus, they all have to make everything sound more complicated than it really is. And it's not that complicated. Just keep it simple. Keep it simple. There is no simpler idea to me than the adoption story of Bitcoin. It is such a simple concept. I put my faith in, one, the design of Bitcoin, the incentive mechanisms built into Bitcoin, and two, the adoption cycle of Bitcoin that I have continued to put my faith in since 2016 when Bitcoin was $400 a coin. And that has continued to play out and will continue to play out. Bitcoin right now represents just 25 basis points of assets under management, of global assets under management. Think about that. 25 basis points. That's it. That's 0.25% of the assets under management in the world are allocated to Bitcoin. Do you think that number is going to go up or do you think it's going to go down? No. I think it's going to go up. It makes sense it's going to go up. Did I need a degree to do that? Did I need to run some regression analysis? Did I have to have a PhD in mathematics or behavioral finance to figure that out? No, and neither do you. And so put your faith in the code and in the adoption incentive mechanisms built within Bitcoin. And I believe you're going to outperform just about any asset that's out there. Okay. All right, friends, I want to thank you so much for tuning in today. I love sharing this information with you. Hopefully you found it valuable. If you have, let me know. If you're looking to get access to my work, you can go to tawariresearchgroup.com. I publish new commentary, new essays there Monday, Wednesday, and Friday. That's tawariresearchgroup.com. All right, friends, as I always like to say, I want you to always remember, let the game come to you.
So that concludes today's episode. Thank you for listening. We'd love to hear your thoughts in the comments section. You can find the show notes on www.tikatiwari.com. If you found this episode helpful, please share it with others, talk about it on social media, and leave a rating and review. Don't forget to subscribe so that you never miss another episode. Thanks again, and we'll see you next time.